Hi, this is Jack from Alpha Charts with a state of the market video. Today is March 27th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my channel. I really do appreciate that. That does help me a lot. Also, you can find me on Twitter at AlphaCharts365. All right, so let's start with SPX, closing right at all-time highs, right? So there's nothing bearish about the SPX, um, which is what we're going to kind of talk about today. Because when you look at the Qs, right, it looks very different, right? And because I'm definitely mostly looking at growth stocks, the Qs is maybe a better indicator, or maybe even the IBD 50 better indicator of my type of trading, which has been very, very ugly. So let's go back to the Qs. And you have this big ABC pattern down, and now you're creating some chop in here. So one possibility is that we're going to come back down, maybe test this 303 level, anywhere from 303 to 297. That's a very good possibility. And then make almost like a double bottom here, similar to this looking double bottom right over here. If you see, this one didn't undercut, so I don't know if this one has to. And again, much smaller version. Actually, you know what? Not that much smaller though, right? So from top to bottom, it's 14%. From top to bottom, roughly, 12%. It's only 2% difference, really, even though they look different. Anyway, point being is that I wouldn't be surprised if we kind of dip one more time and then come back up. We don't have to, but again, this trend line so far is holding, and the price is under the 23-day EMA, which keeps me more cautious, even though SPX is at all-time high and IWM is also underneath the 23-day EMA. So which one's right? Who's right? Who's wrong here, right? Is it that the SPX is going to also, by the way, the Dow Jones at all-time highs? So who's right? Who's wrong on the indexes? Does S&P follow the QQQ and roll over? Or is this just going through some kind of growth correction and things move higher? I don't know, but let's look at some charts and see if we can figure out who's got the edge in this. So let's start with let us start with SMH. All right, so SMH, one of the very important, we'll call it sectors for the economy and for the market overall. And so this trend line is what I've been watching. This is from the March lows, right? And it's held, broke down here. So I was kind of looking at this as a bear flag with this breakdown right here. And then what happened? Boom, it popped right back up. So the expectation was this bear flag was going to come and get down to this 212-ish level. That didn't happen. Extremely bullish sign, right? So, when things don't do what you think they're going to do based on prior expectations, right? Bear flag. Well, that's positive. So now we made a higher low, right? So this could be the resumption of the uptrend. Also, price now got through on great volume through the 23-day EMA. Super, super positive, right? So this definitely is something that I wasn't expecting, and really looks like it could continue higher, which again would be a big positive for the market. Let's look at banks. So XLF, they're hanging out here near all-time highs. Looking great actually. IYG, just look at very similar look to it for IYG. So the banks are holding up just fine. That's what you want to see. They don't have to lead, but they are participating. That is fantastic. Looking at lumber, Lumber has been choppy, we'll call it, but again, is now above the 23-day EMA, held the breakout level. Again, I think that's probably the positive sign right there. Held the breakout level and now is trying to move higher to back to all, not all-time highs, but back to multi-year highs. So lumber is not rolling over. That's a positive for the market. Let's look at bond yields. Switch this and that and that. Okay, so bond yields. So are we seeing something that looks like this? No, we're not. And actually, just on Friday, they broke down, starting to the next leg lower. So a tightening of this bond spread is very conducive for a bullish market. I think that is, again, another cap in the bull's favor. We're not seeing things that look like this. Remember a couple weeks ago, we saw this and like, oh, is that, starting something? Nope. It rolled right back over, back underneath the moving average and making, again, multi-year lows. Multi-year, not quite multi-year lows, but year lows, 52-week lows. How about that? It's going down. That's positive. So we love that. Let's look at VIX. The VIX still declining. We're not seeing big spikes in the VIX, right? VIX. We're seeing, again, lower highs the whole way. Now here's our new relevant lower high right here. That's very positive, right? Volatility overall is going down. Now VIX is based on the S&P, so that would make sense since S&P is at all-time highs. But again, I think the VIX going down is a positive for the market. Let's look at put-call ratio. So put-call ratio never got to a very heated level, right? So we didn't get a ton of fear in the market. Would have liked to see some more fear. Doesn't mean it's not going to happen, but because really it's only certain sections of the market that are going through this pretty nasty correction or went through this pretty nasty correction. So that may be keeping the put-call ratio more in a moderate level. Again, we took the sum of all the indicators, not just one indicator is going to tell us what to do. And right now, it's not really giving us a signal one way or the other. So nothing much to read there. If we got, things that looked like this or like this, that'd be a different story. We're not seeing that yet. Wouldn't even mind something, getting above 1 at this point. Again, this is equity only put call. Yeah, not much of a indicator on that one. Value line geometric index bounced right back again, breaking out near all-time highs, back above its moving average. This is more of a breadth indicator, looking really, really good. MMFI, let's just see what that's showing us. MMFI, okay, look at that. So it did dip to that 50% level, and it's kind of where we bounced. It's done it before in this particular level. So it was a healthy pullback. We were up here for a long time, and you don't see that very often, right? I mean, no one knows when it's going to end, but you don't stay in this my reddish pinkish shaded area very long. But that just shows you how strong the market was, right? There was no give back for months on end, November, all the way through January. Then in February, there's your give back. So we'll see if it's going to make lower highs and lower lows on this. Maybe. I mean, listen, we could get another dip. I don't think we're going to be going back to here. Doesn't seem like that. But I think that was a healthy pullback in a lot of stocks. So that's I think a positive too. Maybe that was enough. Maybe not. We don't know. All right. So let's sum things up here. SPX, all-time highs, QQQs, questionable at best at this point. I think that I'm not going to be a bottom caller or top caller. I think obviously this line needs to be taken out. This moving average needs to be flattening to moving back up with the price above it. And I think this 320, call it 325 area, I would love to see price above that. If we make another bottom and this holds, I think that's going to give you a beautiful cheat area using this trend line, right? So if we can get back to the bottom, comes back around, comes back up, boom, right? Maybe 310-ish, whatever the cheat area is, I think this trend line will give you that cheat entry. So you don't have to wait all the way up here for the entry. If this is some kind of just base building continuation pattern. At that point, obviously, we're going to look for our highest relative strength stocks and that are setting up and jump in those as quickly as we can. We'll see. I think bond yields breaking down and lumber not rolling over. Value line geometric index, starting to move back towards highs. I think those are all positives. To me, this looks more like a shake and bake out of the growth names, and I think that once things settle down, I think everything's gonna be fine. I think it's more likely that this catches up to the S&P versus the S&P breaking down. We don't know what's going to happen going forward, but that's what it looks like to me. All right. So again, I think that I'm not saying go out and buy stocks right now, do what you want, but I think that I'm definitely going from a bearish lean to a much more bullish lean. And, I'm still fairly neutral, still have a high bit of cash. Why did that come up? I don't know. I still have a high bit of cash, but sorry about that. Still have a high bit of cash right now because I want to see this prove itself. But everything that I'm looking at is saying that the market really isn't that broken, and just a little bit more time and patience. And there's gonna be some amazing opportunities. Tomorrow, I will do my stocks to watch video, and that's going to show what I'm seeing as relative strength so far in the market. And there's some really outstanding names, not a ton of them, but there are some that are really showing off. So hopefully I'll be able to highlight those. That's tomorrow. Again, thank you all for watching. Appreciate it. Please like and subscribe. The button, please. I do appreciate it. And y'all have a good, safe week. Hopefully this correction hasn't hurt too bad. And again, opportunities are coming. I think we all need to be prepared. Take care.